Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 13th, 2011. Well, folks, let's get started today. The markets had a small gap up. We sold that into the mid-morning session and ultimately bounced off a little bit of a necktie here. And again, we'll just go over some of the scalps we took today. It was a good solid scalping day again. Yesterday was a little bit more active because it was just wild trading, but today was very solid as well. The first scalp of the day happened to come from the upper levels of resistance right here. If you go back to a couple days ago, you can clearly see a pivot low, closing basis, and pivot low on the tail right in this range. And I gave out the shorting level of 132.15 to 132.20. We went right in between there to 132.18. That was your shorting opportunity, the first of the day on the first candle on the SPY. And again, remember, folks, we trade the SPY, we trade individual stocks, we trade the ETFs, we trade oil, gold, the dollar, you name it. If it's in action, I'll be going long or short depending on resistance and supports. I don't care whether or not the market's in a bullish mode or a bearish mode. You give me a trade, I'm going to take it regardless. That's the beauty of it, and that's what a true trader does. Swing trader as well. You can be a swing trader, an investor, a day trader. In the Money Stocks is for you to help you make money. All right, and again, you guys saw the opening screen there. There's a free trial for the Research Center 1 week, free trial for the chat room 1 week as well. Now, as the market sold here, we came down into what we call a necktie. A necktie is essentially a cross of two moving averages. You can see the 20 sloping up here in yellow, the 50 sloping down in orange. As price comes into that level, that's your buying opportunity. So the short was at the high of the day here. The long call was at the low pivot right here for a bounce, and look at the markets bounce up off of that. And again, I gave out the call to go long on the SPY right around 131.57.58. That's exactly what we did. We actually pierced it by a penny or two, and then the reversal came in, the markets bounced up, and profits could be taken. So right there, two scalps on the spiders, and there were multiple scalps intraday on various stocks out there as well. I'm not going to get into those too hardcore because I want to cover what the market's doing, but I wanted to give you guys an idea of what really has been going on here in the intraday stock chat. Now, as the market moved back up, we started to see some selling, and the markets did again start to sell. And the reason for the selling, again, we saw weakness coming in to many of the energy stocks. Chevron, Exxon, those stocks really seeing some good weakness. Right now, they're both down, and as they started to sell, because initially they gapped up. In fact, Chevron, if we put up the CVX chart, take a look at this, guys. Chevron had a pretty solid gap up. It was up as much as almost $1 at the open, and then started to sell and has kind of gone a little bit lower. And remember, the Dow Jones Industrial Average is made up, a large portion of its weighting is in energy stocks such as Chevron and Exxon, as well as the S&P 500 has a lot of energy stocks in it. So weakness in energy is ultimately going to bring those indexes in. And initially we had a bounce there, and that was off the start of the day, but it has since faded. All right, going back to the SPY, let's talk a little bit more action here. Markets start to fade. You come down here, you take out the little pivot low. Obviously, no longer is there a necktie. You come down below that, and you ultimately come into the low pivot from yesterday afternoon right here. That's your next scalp opportunity. See this little pivot? Look at how the market goes right there, gets a bounce. What does it bounce back to? It goes right back to the 50 moving average. Now, let me ask you this question. Why wouldn't you have taken a scalp along at the 20 right here or at the 50 here? All right, and again, play the Jeopardy music in the background so you guys can think about this one. The answer is very simple. Because you already hit them both on the first scalp here along that we called out. The methodology in the money stocks is very strict. It tells you you are only to take scalps if you want to keep a 90% success rate in any trade. And this goes for swing trading, day trading, and investing. The first hit of a major support or resistance level. Well, here's your first hit. That was your first hit. So that means the next time down, you're not scalping those. Let it go down. Let it go down to the next level, which is right here. Then look for a little bit of a bounce. Sure enough, you get a bounce. Goes back to the 50 moving average, which is now your resistance since you're below it. That's going to be a pullback. You pull back. Where do you go? Directly to a double bottom. This is such a beautiful little example of a trade. What are you doing at a double bottom right here? You're obviously going long. It's the first hit of a double bottom, and look at the bounce on the market since then. So just looking at the markets right here, there was really one trade, two trades, three trades, 4, 5 trades on the SPY today, and that's just on the SPY. There were great trades on many, many other stocks, JPMorgan, and even the USO and stuff like that was in play today. I can't even recall half the trades called out this morning. But again, remember, 1 week free trial. Take it for free. Make some money. See if you like it. You know, we've had a lot of people coming from other services out there that are just like, you know what, I got to get away from these other services. I hear good things. They try it, and they're with us for life. We've had a large portion of our membership, believe it or not, in the chat room and research center has been with us since the company started. And I love to see that. Truly love to see it. All right. In any case, folks, let's go to the USO because I think that's the next big call that I want to discuss. We talked about the USO yesterday and I said to people in the Research Center nightly video as well as the chat room yesterday afternoon, I said you should get a bounce tomorrow morning on oil. Now, the reason for the bounce on oil was simple. If you go to your daily chart here, you can see, and let me zoom in a little bit here. You can see you broke above and confirmed, and this is using the confirmation signal, the best signal ever developed by anyone out there. At least that's what we've been told. We developed it here at In the Money Stocks, and the confirmation signal told us we broke above the 2010 high. Look at this, 2010 high right here. You took it out and finally confirmed on the latest move up in oil. All right, when you confirm above a level, it tells you that this level now becomes major support, and if should you retrace into that level, you will then have major support at that level and it will bounce. So sure enough, yesterday as we sell off and the previous 2 days we sold sharply on oil, you come down to this level. This is now huge support. You should bounce, and sure enough, look at how high oil got today on the bounce off of this level. So you hit it yesterday. That's your long opportunity. First hit of a retrace confirmation level or confirmed level. You're going to get a bounce. Look at that move up in the USO. Now we've retraced back down, but we're still holding that level. I still think that level could hold for a little bit. If it does eventually get taken out, then you're coming back. Most likely, I wouldn't mess around with a long until you hit the 50 moving average on the daily chart. But again, get more details in the Research Center. Take that free trial 1 week, and you'll figure out a lot of stuff in tonight's video when I go over it with the members. All right, the dollar today, let's take a look at the dollar. The dollar has been inching a little bit higher as well, which, as we know, the dollar moves in the opposite direction, or I should say the markets move in the opposite direction of the dollar. If the dollar's going down, the markets are usually going up. If the dollar's going up, markets are usually fading. And that's exactly what you've seen here. You can see that the markets have faded. This is the dollar chart, the UUP, and sure enough, as the dollar's moved up, we've seen the spiders obviously come off their highs of the day and fade to the downside. Here's the SPY intraday 10-minute. And again, the SPY is basically an example of the S&P 500. It's a tracking ETF for the S&P 500. So that's why we use it, because everyone has access to it. You can just pull it up on any stock software and take a look at it. All right, so that's what we have going on there beautifully. And again, markets have faded. We're basically flat to slightly negative. It's not by any means a major sell-off, so don't think it is. But it's a nice fade. That's a very good fade, and it's all about energy stocks. In fact, it looks like there is money rotating out of energy stocks, oil stocks, into technology. That's one little point I want to make. As we look at the Dow Jones Industrial Average, S&P 500, and NASDAQ, Dow is down 12 points, S&P is down 2 points, NASDAQ is actually up about 0.25%. Now, you might say, well, what do we mean rotation? Well, basically what we've seen, and this is a good example. I'm going to use Apple as an example. Apple has been selling for the last 3 weeks, even when the market was going up. Remember, the markets had a really nice move until the last couple days in this week. But if you go back to early last week and the previous week, the markets were just shooting straight up, back to the 52-week highs almost. Well, Apple was just selling off the whole time. And notice how it coincided with, as Apple was selling, Chevron and Exxon were just going higher and higher. All commodity stocks were essentially going higher, which is telling you people were taking money from Apple and putting it into energy stocks like Chevron and Exxon. So there was a money distribution going on for people, or especially players and speculators taking money out of Apple and other technology stocks and putting it into those energy. And that's why you saw the weakness. Also rebalancing on Apple's part of it as well. But obviously this amount of downward motion when the markets were up is more so the kind of movement of money flow. Well, just over the last couple days, we've seen Exxon and Chevron take a huge hit. In fact, Chevron was at $110 per share a couple days ago, going back to last Friday. Today, $103 and change. So basically a $6 to $7 decline on Chevron. And guess what's happened the last couple days on Apple? As the market's gone down, Apple's actually up. Today, Apple's up 75 cents. Now, it's off the highs a little bit, but still positive on the day. If you go to yesterday, the markets got hit a little bit. Guess what? Apple was up nicely yesterday as well. So you can continue to see here, you're still seeing a movement up. And that's telling me even though the market's weak, money flow is coming out of the commodity area and back into some of these tech plays. So it's a rotation, essentially, a rotation of money. And I think that's a really intricate, important point to look at. A good example here, IBM. IBM's up today nicely. That's a rotation, even though the markets are weak. You see the Dow and S&P down. NASDAQ Technology's up. IBM's actually in the Dow, but nonetheless, it's a good technology stock to look at. And we can even look at Dell. Dell's up 3% plus today. DELL is the symbol there, up 50 cents. It's a great move. So you look at a lot of the technology stocks, they're positive, but a lot of the other plays involving commodities are the ones dragging this market down, especially on the S&P and Dow Jones Industrial Average. So a cool little side note there. Gold today, GLD, let's take a look. GLD is still up 23 cents, but off the highs. SLV, which is silver, has yet to confirm a change in direction to the downside, but that is off the highs as well, trading up about 19 cents. Silver has just been an unbelievable powerhouse. Alrighty, guys, I think that's all for today. But again, just one more note here. I want to make sure everyone is looking to take that 7-day free trial just to take a shot at our services here at In the Money Stocks. Also, we have a webinar this Saturday. We don't have, obviously, a free trial for that. That's a one-time event, and you want to get involved if you really want to learn the key count systems and everything else we go over. So, again, take the 7-day free trial. If you're an investor, if you're a swing trader, if you're a day trader, there's something for all of you. Research Center is more for investors and swing traders, and chat room is more for swing traders and day traders. All right, take care, guys. Have a great afternoon. Look forward to seeing you all as part of InTheMoneyStocks.com.